JJ the CPA here. Hope you're doing well. On the Employee Retention Tax Credit, 7 steps to get the Employee Retention Tax Credit. If you don't mind me telling you, I've got a seminar that you can get instantly, very reasonable, over 3 hours, has a PDF of the PowerPoint that goes along with it, as well as then examples, Excel spreadsheets, flow charts, the links, as well as 2 additional videos on how to prepare the Form 941X, which is what you file with the IRS to actually get your check back. Now, the 7 steps that I'm getting ready to go through with you are from my seminar. So, what are the 7 steps to get the Employee Retention Tax Credit? Well, the first thing that we want to look at is, do you qualify? And if you are an employer and you pay W-2 wages, and the dates in which that would be required would be March 13th of 2020 through September 30th of 21. Now, if you are a recovery startup business, then fourth quarter 21 could be available to you. If you do have wages, then what you need to determine is, well, what time period qualifies? If you are a business or a nonprofit and you had the wages and you had a governmental order causing you to shut down either fully or partially, then during those exact days of that shutdown, then you would be able to qualify. The other way, and you do not need to accomplish both things, but the other way to qualify is to have your gross receipts down in any given quarter compared to that same quarter in 2019. What employers are included is based then on the year. So when we're talking about a large and small employer, the thing I want you to note here is that based on 2020 and based on 21, there is a different definition of a small or large employer. A small employer gets to include all the wages to all employees, whether they worked or not. A large employer is only able to include the wages paid to an employee that didn't work. When you are now determining if you're a large or a small employer, you only look to the head count in 2019. That head count is based on full-time employees, not full-time equivalents. So whatever that head count is in 2019, that determines your head count for 2020, as well as then for 2021. When we now look to step 3, what wages are included based on the year? So wages do exclude wages that were used for other tax credits or PPP loan forgiveness. Wages exempt from Social Security and Medicare taxes cannot be included. Typically, that would be wages that were ran through a cafeteria or 125 plan. Also, wages to employees that are related to a more than 50% owner, as well as the more than 50% owner, are not going to be included unless that more than 50% owner has no living blood relatives. Again, based on that size of the employer, then that determines what employees get to be included. Now, I want to note to you, all employees are included, hear me on this, when you are determining the ERTC. It's just that if you're a small employer, it is only going to include, well, everybody. If you're a large employer, it's only going to include those that didn't work but still got paid. So in either circumstances, it's going to include part-time, full-time, temporary, salaried, non-salaried, exempt salaried, you name it. So whether you're large or small, all employees are going to be included. You never break out an employee grouping between essential and non-essential employees. When you are now looking at this, it then just comes down to this. A small employer gets to include everyone. A large employer only includes employees that didn't work but still got paid. Now, for step 4, you want to determine what is the maximum wages included based on the year. Pretty simple, it's $10,000 max per employee. But in 2020, that's for the entire year. In 2021, that max is per quarter. So it's $10,000 max of wages per employee for quarter 1. It starts over and it's $10,000 max per employee for quarter 2. And then you guessed it, for quarter 3, it's $10,000 max per employee. Now, that credit rate is 50% in 2020. It is 70% in 2021. Now, what we do is the calculation. So what is that employee retention tax credit? It's the qualified wages, which includes the employer-paid health insurance, during the qualified period multiplied by 70% in 21, 50% in 2020, and that equals your ERTC amount. And then your last step is to file Form 941X. you can request a claim for refund or have a credit applied to the next return. So those are the 7 steps. What it comes down to is if you do qualify, you still have time to go and get this. Check out my seminar, check out my playlist. All right, hey, thanks for tuning in. I'd love it if you'd subscribe. And then don't you ever forget, you've never met a CPA quite like me. You have a great one.
Joshua Jenson, JJ